Friday, October 27th. This is an end of the day and end of the week SPY recap. And today, first of all, on the daily chart, we end up with another two down day. We took out the low of the previous day. We closed red. We held below the midpoint of the prior day. That now is 3 days in a row to the downside after a little pause early in the week. And right before that, we had a whole bunch of days down as well. So, as we continue down on the daily chart, there's a little bit of short-term exhaustion risk. On the weekly chart, we talked about how this weekly 3-bar last week would likely take out that low. And then the question was, would you get anything that looked like it might be reversing up to the midpoint of that bar or not? And we kind of determined after 2 days here that we were expanding to the downside in the bigger picture. And that takes us to the monthly chart, which, has a next target down here. Well, there was a target purple line on the daily chart that we hit today, but the monthly chart with a couple of days to go in the month has a target down here if we want to get there. And then even more important, since we're kind of two down on the month and negative, it's really the quarterly chart. That's our big picture focus here that shows a 2 down quarter with a likely target down here before the year ends. So that's why we're still biased to the downside. But then the question is every day, are you getting actionable signals here from the strat, or are you getting continuation plays, or are you getting unique opportunities intraday? And maybe this is a good time for me, as I go over today's action, to kind of just recap kind of my 3-phased, approach to trading here. For maybe there are certain people looking at this that haven't seen many of my videos. I have a lot of my trading plan, or most of it, in a playlist. So if you go and look at that, I really cover a lot of that in detail there. But I'll kind of recap it here now just to show you how today's action kind of fell into the big picture of the 3 things I look at. And the 3 things I look at every day, part of the plan, are first of all, let's go to the daily chart. I always judge, the previous day, are we at the midpoint, above or below? And I talk about why that's important for my bias. Then I kind of look at a pre-market range, which is the blue line. So coming into a session, I'll judge the high and low of that pre-market range. And then I judge the very first bar, the first 15-minute bar. And that sort of is my reference point for the rest of the day. And again, on the playlist, you can see how directional days tend to, on the downside, go below the pre-market low. They generally have 2 pushes, or on the upside, they go above and 2 pushes up. And how this bar becomes a good reference point for continuation or failure early in the session, because I believe the high or low of the day usually occurs early in the session. And that's why I want to focus on what develops relative to that first bar. So anyway, that's the intraday structure I'm looking at. I then place that in the context of the strat, which is all over the internet. If you want to Google the strat and see the actionable signals and how that tends to work in terms of broadening formations, that's the key to the strat. So in other words, when you have a 2 up, 2 down day, which is an actionable signal right here, you're looking for it to take out that low, these 2 bars being a compound broadening action of that bar. And you can do it on any time frame, bigger time frame, smaller, it's the same concept of just you expect broadening action, and when, that's kind of creates targets. And if it fails to, reach a broadening target and then goes the other way, that's a powerful signal to expect a little broadening action the other way. And then you're always judging, is the shorter term broadening action going to expand into bigger picture broadening action? That's why I look at multiple time frames, the daily chart, the weekly chart, and, well, this is the quarterly chart, but you could say the monthly chart. And then you can kind of judge how all that comes together. And finally, there's an approach, ICT. It's all over Twitter and YouTube. And it's there's a lot to that, but I just essentially use 2 principles there, and that's taking out key liquidity, which is key pivot points, high or low. So if you come down here and you're coming down, you're taking out sell side liquidity here with there are sell stops down there. And if you come up to certain targets, let's say you're coming up to this pivot right here, that's taking out the buy side liquidity. So I'm always looking at that on the chart as targets, and then also fair value gaps or inefficient pricing. So when you come, for example, when you had this low here and this high here, this creates a fair value gap, and you can kind of go over ICT and read about what that is, but it's the space in there. And if you look at a chart, you'll see price kind of moving fast through those areas. So a lot of times it wants to come up and rebalance that inefficient pricing, and you expect that to happen, and then either you do that and continue back up, or that's a good sometimes resistance point to just balance the inefficient pricing on the way down and then resume the downtrend. So, I'm essentially looking for liquidity and balancing, fair value gaps in terms of the analysis. So when you put that together with the strat, with my, opening price action relative to the pre-market range, relative to the midpoint of the prior day, that's how everything comes together. And you can look at a lot of that in my playlist video. So anyway, just to recap today then, what are we looking for? First of all, in terms of strat principles, we're just continuing lower. So it's a 2-down continuation. We don't have any actionable signal, but we know the trend is down. We know the bigger picture context has targets below. So you're keeping that in mind. And as long as you stay below the midpoint of the prior day, you are biased to the downside. Whether you're going to get strong continuation or not, that's up to the 15-minute chart. But you can see here we never crossed above the midpoint of the prior day, so we're biased to the downside all day. And obviously, if we were going to, here's the pre-market range between the blue lines, and if we were going to head higher, we would go above that, likely pre-market high and the midpoint of yesterday. So we never did that. That's why you're biased to the downside today all day. So now what happens? We look at that first 15-minute bar, and in this case, we broke below it on bar number 2. So that's kind of a sell signal. And when you're getting a sell signal inside of the pre-market range, I'm generally targeting the high and low of that range first, and then I judge, what might be developing here relative to those other targets that I just discussed, relative to the strat and relative to ICT, by liquidity areas and everything else. In this case, it was just the first target was taking out the pre-market lows down here. So essentially, and I also kind of use that midpoint to the first bar as my, once I get a signal in here, for example, as my kind of stop initially, in case, it doesn't follow through. In this case, came down a little bit. You can see we paused. We kind of got approximately the midpoint of the prior bar, and then we started down, and what do? We took out our first target, the pre-market lows right here. So this was a little trade, and given that we're, at exhaustion risk, I'm not surprised that we don't get strong momentum day after day after day, but it's possible. But in this case, it just so happened that price hits that area and then decides to bounce up. So, it's the type of thing where if you got in here, you have to kind of realize that's your target and you're at exhaustion risk, and then you got to be very nimble if you don't get the follow through to maybe get out at break even. And I happen to scale out of a lot of my trades, so that's how I protect myself that way. But anyway, assuming this was kind of a break even type of trade that eventually reached its target, then came up back to entry, then you're watching price action. Now, again, we're below the midpoint of the prior day. All price did was come up, take out that first bar high. Remember, I discussed that first bar is everything to me, and it failed. So there was technically taking out liquidity on the day, giving you a sell signal here for the strat intraday on the 15-minute chart, a 2 up, 2 down, and this could have been another sell, given that I discussed a lot on yesterday's recap video how in this environment, when you have a lot of continuation lower, I like to see buy-side liquidity taken out first before getting, resumption of a trend. If you can think about it, you have like a downward trend here, a trend line, a big channel, and a lot of times price will kind of, drift up within the channel before it heads lower. So that's why after exhaustion risk, I like signals many times that come up and take out liquidity area and then reverse. In this case, that's all that happened here is the first bar was taken out, reversal, there's your sell if you want to do it. You're targeting these lows. And another reason this was a good trade is because, when I see a red bar from yesterday, I'm kind of expecting that low to be taken out. I go over that in a lot of the playlist videos. And given that that first move never took out yesterday's low, there was a chance you were going to have this kind of move. And obviously price went all the way down for the rest of the day. And so those were the only real 2 trades according to my methodology. And you could see how it kind of aligns with, downward bias in the big picture, a downward bias on the day below the midpoint of the prior day. And in this case, it was, taking out some buy-side liquidity before it really wanted to make its move. And given that the open, developed here inside of the pre-market range, you're at least targeting the high and low of that range to start. And then you want to see what happens there. Do you immediately continue slice right through it, or is that kind of a pause reversal area? So that's kind of it. And again, I guess made this more lengthy than usual, but I just wanted to explain some some of that. Again, a lot of it's on my playlist videos for anyone interested. And we end the week, with a big red bar. So you're expecting this weekly chart to kind of go lower into next week. We hit this target. We still have a monthly target down here, but it's a little tricky with 2 days to go. You can see this area here way back, barred in, so there's a little buying tail. So that's sometimes the midpoint of that is support. So I don't know if we're going to get there next week, but I think we should test lower. Then the key is going to be, do we even begin to get above the midpoint of the prior week at any point? That maybe turns it up. But in general, I'm not expecting that because our quarterly chart, final thought, is expected, within the next couple of months to reach, down here. So, I'm still biased to the downside, but we are at exhaustion risk. And, the best thing, again, will be this type of scenario like we had earlier in the week. We failed to go up. And, this day was a 2-up day, for example, that failed to broaden up here. That was expected. And that's why this down signal was even more powerful within an overall down environment to continue to its target and obviously below. So again, that's the way it all comes together, and we will expect a little lower next week with exhaustion risk and kind of see in the next 2 days how the month ends. But knowing we're still, until that weekly chart even starts to turn up with a 2-up day or some kind of, 2 down that gets a rally strongly to the midpoint of that bar, I'm not going to begin to really get excited on any buy side, trades. So that's it, and we'll see what unfolds starting next week.